Hello everyone and welcome back to Sudden Wealth. I hope you guys are doing very well. If you do enjoy the content, please consider dropping that like and subscribe. I continue here on my holidays. Tomorrow I will change place once again, so you'll see a different background. By the way, one thing that I've noticed is I've been a bit more political in my last few videos, and unfortunately I get the feeling, or I get very good guessing, that I'm actually being shadow banned and my views are being cut to my most loyal followers. So I'm a bit in doubt if I shall continue to bring those views a little bit more often, or if I try to spread the message to more people. So in that sense, I'm a little bit torn. You guys let me know what you think. Look, I think this is one of the most important elections you're going to see in your lifetime. I think it can really make a huge difference in the future across multiple factors, but particularly international security, which should impact every single one. But I'll leave that for you guys to let me know what you think. Now, what matters the most is the liquidity index keeps on increasing. You're seeing stocks doing fairly well. Nvidia had very good results, but you usually have your buy the rumor, sell the news event with Nvidia, and this time was no different. Although they overperformed and by quite a bit, the stocks still tanked at the worst around 8%. I think it will probably resume its climb going up. We've tested a few moving averages in the Nasdaq in particular. So we had the 21 moving average at 19,200 or so, the Nasdaq 100. We got there, then we bounced back. Bonds are a little bit under pressure, but not too much, fairly stable. So that should be a good sign. As you guys know, the bond market is the rule of thumb for the rest of the market. You can have it going down, but you cannot have it going down too aggressively, as it creates a huge instability in all the other markets, as it's bigger than all the other markets combined. You see GDP came stronger than expected. This is actually very important. The S&P 500, which kind of guides the market, goes up if we have rate cuts and non-recessions, meaning non-official recessions. Now, if we have a recession behind the numbers, that's a different story. We're talking about market terms. We're not talking about the real economy. I've explained this ad nauseum, but I will say it again in case not clear. The stock market and the real economy have nothing to do with each other. Stock market is driven purely by liquidity in the system. That's it. Of course, absent any kind of black swans in the sense of global pandemics or massive conflicts across the globe. But other than that, and even that, they tend to move the markets in the short term, not in the long term. It's all about the currency debasement. It's all about the injection of dollars, euros, and other currencies into the system. You devalue your currency via the asset base, then the assets go up in price. That's very simple. Then some assets go up more because they have certain advantages that others don't. So that would be a positive thing. When there are rate cuts and things are already collapsing, it's really, really bad. The economy, as I said, I was telling you for a long time, then you have an 818,000 job revision, but it doesn't matter. That's the key. That is for the real economy. So for the real economy, it matters, don't get me wrong. But one thing is what you know. The other thing is how the market will react. Because you're not in the market, it's not yourself. It's not you thinking about yourself on about how things should be. No, it's what all the other market participants believe it's happening. That's the key. Then when you look at crypto, by the way, I had so much fun this week because I saw this in real time. I was just having a bit of fun on Twitter, and you could see like Bitcoin was like 57,000 and people were pissed. This thing is finished, blah, blah, blah. Then Bitcoin goes to 61,000. It's the greatest thing in the planet. And then it goes back to 58,000. I think now it's about 59 and everybody goes crazy again. So, and basically we keep on staying within the same range that I've said so many times, somewhere between 57 and 62,000. Most of the time between 58 and 62. Can we go a little bit up? Yes. Can we go a little bit down? Yes. But around those levels. Do I think that we're going to stay here forever? No. We're actually probably coming to an end of this sideways movement. Can we stay here for another week? Sure. But we are approaching quickly the 6 months sideways to correction period after the halving. After the top in March, and about 5 months after the halving. So we are about to gain a lot of strength to start going up a bit more consistently. Ethereum continues to shit the bed. Basically, we today tested the 200 daily. We touched it. We moved on up. That's a bit encouraging. But the thing is, and I've said this before as well, Grayscale had 9.2 billion in Ethereum. Now, people are really, really pissed, and I really don't understand why, that Grayscale is selling. So, just for you for the ones that don't understand it, but Grayscale used to have Ethereum as a trust, just like Bitcoin, which means you could buy shares in the trust, and then there would be a time period that they would hold the shares before you could sell them, okay? And then the selling and the buying would affect the holdings on Ethereum. Now, because there was nothing else available for institutions, the institutions were paying 2.5% fees, 2.5%. Now, the ETFs are 0.2, 0.15, 0.17, 0.21. So the question becomes, let's say you're an institutional player and you can only have exposure to Ethereum, and to Bitcoin, by the way, it was the same story. That's why Grayscale Bitcoin Trust sold almost $20 billion in Bitcoin. And they're thinking, okay, I'm going to buy exposure to Ethereum. All of these ETFs give you exposure to Ethereum. Why would you pay 2.5% if you can pay 0.15 or 0.2? Exactly, you wouldn't. And if you had an Ethereum in the Grayscale Trust, what would you do? Sell it. So you stop paying the fees and you go buy it somewhere else where you pay less fees. It's really that simple. If you had locked exposure to Ethereum and it's now liquid exposure to Ethereum or to Bitcoin, it's the same story. Bitcoin was 2% fee. It's now been decreased to 1.5% fee. However, the Bitcoin ETFs are 0.15, 0.20, 0.17, 0.25. So obviously people sell their exposure in Grayscale, so they go someplace else to pay a lower fee for the same exposure. Why is this so complicated? I really don't understand. It's like imagine you're buying the Nasdaq, for example, right? I'm gonna buy an ETF, the Nasdaq 100, and you go to and you check Vanguard, you check Fidelity, you check VanEck, you check BlackRock, you check all of this, right? And one of them is charging you 2% fees, and the other one is charging you 0.2%. So basically, 10 times less. Do you think you would say, oh my God, this looks like a great, I'm going to buy this one where I pay 2%. By the way, particularly if I have $100 million to invest, that's basically $2 million a year in fees instead of 200K, but I really feel like paying $2 million in fees. No, it's the same story. Like, sorry guys, I mean, maybe I'm coming across a little bit too aggressive here, but there are certain things that really puzzle me. Why people get so confused. Like, this is one of the easiest things, which is basically, you're an institutional investor. You want exposure to an asset. You can pay 0.2% or you can pay 2.5%. You sell, if you have anything in the 2.5%, you sell it and you buy it where it's cheaper. That's it. So the Grayscale in Ethereum still has 6.7 billion left to sell. There are some rumors that the US government is selling Bitcoin. The DOJ, most likely. I wouldn't be surprised at all. But maybe I hope that this has clarified. It's all about the liquidity. It keeps on increasing. Q4 tends to be extremely good for crypto. I think it's going to be extremely good this time around. Oh, and by the way, remember when people had, I know that I'm probably going to get shadow banned by this, but so be it. Remember when people said that the US government was censoring people using large corporates like, Google and Meta, formerly known as Facebook, and people called it, what did the mainstream media call it? A right-wing conspiracy theory and a hoax? Oh, apparently Zuckerberg thought otherwise. Oh, and by the way, the CEO of Telegram gets arrested because people are using his platform for, nefarious things. So I guess that we're gonna arrest the CEO of, I don't know, ExxonMobil, because they also use oil. Maybe we're gonna arrest the CEO of Toyota because a certain group of extremists uses the Toyota trucks. See how stupid this is? Or maybe we're gonna arrest Bill Gates because some people use Windows. Or maybe we're gonna arrest Zuckerberg because some people use. You see the point? It is what it is, right? This is unfortunately where we are today. It's quite mind-boggling to see dictatorships like the UAE actually saying to the free world that we are going too far. That's like, if you asked me 5 years ago this would happen, I would say no. When you see 11-year-old kids getting arrested in the UK for retweeting posts, I mean, it's actually getting quite dangerous. So that's why I'm so focused in really getting the financial freedom this cycle, and hopefully putting myself in a position where I can live wherever I want, wherever I want, and basically take advantage of regulatory arbitrage and take my life that way. But that's a bit of a different story. So in summary, oh, by the way, there's something interesting that I've seen. Sorry guys, today I'm really jumping all around, which is I've seen Discover Crypto, Crypto Banter, and all the likes saying that Ethereum is dead, saying that Ethereum is finished, saying that Ethereum will never pump again. Even people saying that, the reason why Ethereum will never pump again is because Vitalik has a girlfriend. Okay. So basically everybody's coming with a thousand reasons why Ethereum will never pump again, which means we're probably getting close to a pump. And this is the things that you want to see. We want to see that we are still far off from euphoria. You don't want people to come up with reasons to justify why a bear market will never happen again, or why Bitcoin is going to overtake gold in this cycle. You want people in complete disbelief and completely panicking. But by the way, guys, it was so funny because I was seeing these were the same people, right? Bitcoin's 57, terrible. Bitcoin 61, the best thing in the world. Bitcoin 59, terrible. It's the same Bitcoin. Does the same thing as it did yesterday. There's the same amount. There's a little bit higher amount than it was yesterday. It inflates at the same rate as yesterday. Everything is the same. People just don't learn. People want to see those big, fat, juicy green candles before they feel more comfortable. And with that, guys, thank you very much for your support. I hope you guys drop some like and subscribe, and I'll catch you in the next one.